welcome. Patriot Radio News Hour. Happy New Year. 2019 is here, and it's a hump day to boot. I'm Joe Jaquint, CEO of the Patriot Trading Group, and I hope today finds you well. It has been cold, cold, cold here in the Valley of the Sun. You know, my wife is trying to tell me that this is normal. It is not normal. We've gone probably almost a week now where I don't even know if it's gotten to 50. This morning, as I was getting in my car, it was 30 degrees this morning as I was driving into work. And I know all you people living elsewhere, you're like, 30 degrees is nothing out here. Trust me, it's cold. But I hope all of you had a great holiday. I know today's like the day a lot of people, all right, got to get back to work. Those that are a little more fortunate than others were probably off since Christmas. The kids are still, I think, I know the college-age kids aren't quite back yet or have to go back yet. But the high schoolers, you know what? It's sad that I can tell you I'm not sure if I know my younger son isn't back yet. He's still at home. Matter of fact, today he's getting his official license. Apparently the DMV is a state thing, so it's not part of the government shutdown. He was supposed to get it on Monday, but they had a computer glitch. Nothing like the newspaper thing, but today he's going to be out on the road, so watch out, Phoenix. He's my last one is now going to be in about an hour. He's going to be taking his official driver's test and joining the masses out on the freeway. Our toll-free number, 800-951-0592. The website at allamericangold.com. The metals plans, right, we're shipping as we speak. They've been out. We're working on it. It'll be close. You know, I keep forgetting how many people are in this thing. It's awesome. It will be close. I think the pickups in Colorado, you should be hearing from Jason. He'll start setting those appointments. But I think, fingers crossed, by Friday they'll all be done. The latest would be next Tuesday at the absolute drop-dead latest. So everybody in the metals program, start looking for your boxes. By the way, 2019 Silver Eagles, about 2 weeks. So 2 weeks if you pre-ordered those. About 2 weeks you'll be getting a call for those. What else? I think that's kind of all of the laundry stuff. My mom's still in touch. She actually leaves Thursday, which makes us sad. Had a great holiday. We really did. Spending time with the family is always a big deal for me. We did something super fun. And my aunt and uncle and nephew, they were in town from California. Yeah, I know. And I will just tell you that it's worse than I thought. They are desperate to get out. My uncle drove from Syracuse, New York. He was 18 years old. Got in his Le Mans convertible and drove to California, working odd jobs all the way there. You know, back when you could do stuff like that. And has lived there essentially since he was 18 years old. He is now 60. And I don't think a day went by. They were here for about almost 4 days. A day didn't go by where they didn't say we got to get out of California. And they're actively looking for work in Arizona to make that happen. And talking about and again, they are conservative California, which kind of makes them regular Democrats here in Arizona. You know, that's the problem, right? A conservative Californian is like a Democrat in most of the red states. But they were here. I'll tell you what they had to say, but I want to tell you, we went to the shooting range because I know they're untypical California. They own guns. They like to shoot guns. I'm like, hey, there's a range right down the street. And we all went out. My mom, who my mom has never held or shot a gun in her life. 74 years old. She had a blast, just a blast. It's something where you don't. And we go. My wife and my kids. We go. But if you've never done it, like these places, as an example, so we have a 38. We've got a shotgun. We've got some guns. But you can also rent them there, and it's not expensive. I mean, a lane here is like $15 for an hour. Then you can rent different guns. So one of the things we did is we rented an AR-15. Wow, awesome! Blown away. I got to have one now. This is the problem. Yeah, I now have to have one. It is so easy. There's no kick on it. It's amazing. Just blew me away, and my mom just had a great time, and so just put that on your list of things and check it out. It's pretty. Put it this way: there was 8 of us shooting. We shot for a couple of hours. The whole thing was like $200. I mean, you just can't beat it. So anyway, that's what we did. New Year's Eve, that's a no-go for me. New Year's Eve, I don't even like to leave the house like past dark. So I did not make it to New Year's. I made it to the New York New Year's, and then I called it a day. When we get back, listen, we got a lot of things to talk about. Government shutdown, stock market, gold and silver, the rally continues, and so much more. 800-951-0592. That is the toll-free number. It's early in the day, so we'll see how it goes. The Dow is down, not much, about 40, 50 points. The S&P is down a few. The Nasdaq's up a few. That's an improvement. It's been down quite a bit earlier this morning. We'll keep an eye on it. 23,200 on the Dow. For whatever reason, oil's catching a little bit of a bid. It was down. It actually hit a new low this morning. Someone put a buy in there. I don't know, but still, $46. It's not enough. We'll see. I'm worried about that oil because it contributed so much. Today, matter of fact, people were talking about it on the Idiot Box, about how it used to be cheap oil was good for us because we get to save some money. Right? They don't care, but they don't care about us. But now you got to remember, we're the largest oil producer in the world. Number one. I mean, we didn't used to. Remember, we used to, 3-4 million. I mean, we're closing in on 12 million barrels of oil a day. So now, apparently, throw that into the negative column on falling oil prices. I guess that will more than offset whatever you and I could possibly save at the gas pump. But as I told you, my aunt and uncle were here. And they live in, I don't think they'd mind, they live in Long Beach. It's about 7 minutes for them to get to the ocean, to the beach. So they were talking all weekend about how they want to get out of California. That how bad it's gotten there. Homelessness everywhere. The illegals, they've taken over. The fact of the matter, they said whatever you hear on the news about crimes by illegals and things, you're not even getting close to what's happening out there, mate. That they say, they deliberately try not to report it. And then, of course, taxes and how expensive it is to live there. And I kept telling them, Hey, listen, don't come over, don't California my Arizona, but I just wanted you, Colorado, I know it's got the same problem. It's not over. The exodus continues. Matter of fact, over the weekend I saw two different articles. Something like 150 people a day leaving Illinois. Over 125 people a day leaving New York City, right? They're leaving these failed blue states in mass droves. High tax, right? Essentially, you pick all the high tax there. People are leaving. We can't afford it, and we're tapped out. And now, of course, we've got the government shut down. The government is $22 trillion in debt. Well, just under. And I don't know how the shutdown, I guess the shutdown kind of affects it, but we're less than $90 billion, and we may have already passed it, we just don't know it, right, because of the government shutdown stuff. $22 trillion. But that's only a slice, right? Consumers, record high debt. States never have seen this kind of debt. And these states, they're all different, right? They all play these Ponzi schemes, right? The blue states are even worse, right? You know, you can just think about California, right? You go to Illinois, New York, New Jersey, Massachusetts, right? You got all of those, what I'll call the blue ones. They're the worst. But don't think Arizona and Colorado are better. Right? We're able to hide it a little more, but they're not paying. They're not paying those pensions. They have no intention of paying the pension. Right? They're going to figure out a way. Sooner or later, when it gets bad enough, they're going to, you think about too big to fail. Right? They're too big. I mean, California all by itself is like, I don't know what number they are, but they're like the 5th, 6th, 7th largest economy in the world. Can't fail. They're going to need a bailout. And I'll say this, go out to our website today. David Walker was out there today talking about the debt, talking about all of the things that they've been warning about for 10 years. 10 years ago, what was the debt? $11 trillion? Think about what the debt was when my oldest son just turned 19. My youngest son just turned 16. Let's use him. The debt when he was born was between $5 and $6 trillion. 16 years later, it's 22. Now, they would lead you to believe that outside of the crash/war, where they allegedly told you twice the deficit exceeded $1 trillion. Just as little as 3 or 4 years ago, they said it was only $400 billion. Then how is it that in 16 years the deficit's gone up $17 trillion? That math don't work. That dog don't hunt. Right? It's this one massive lie after another. And now our central bankers are determined to take down the rest of it. So when we're sitting here and we're talking about what comes next, what are we going to do, what are we not going to do, know this. This is a certainty. Default is coming. The money's going to get changed. The great stock market rally, right, is over. And you start to think about all of the things that they told you to do, right? The and that was somehow going to lead you into economic salvation. I saw this report. They broke out the wealth. They said that 0.7%, so less than 1% of the country makes $1 million or more. All by themselves, they hold more wealth than everybody else combined. According to and again, I didn't do the research, so we got to take the government at its word, that 7%, and we're really, I guess, 6.3%, of the population make between $100,000 and $999,000, right? Just under the million. And if you add up those 7% of the entire population, they control, it was almost 90-something% of all the wealth. That means 93%, right? The other 93% are getting the scraps. Here's what I'm telling you. The 0.7, you're going to probably be okay. It's all the rest of them that they're coming for. I mean, it's amazing what they've done. Right? This is what they wanted to do, right? They bankrupted us all, so the very, very few people at the very, very top got to make a bunch of money. By the way, today, I don't know, it hasn't gotten a ton of news, but another bank, one of the biggest banks in Italy, has just been taken over by the ECB today. Their stock has been halted. Matter of fact, the EU now has appointed a slate of temporary administrators. The entire board of the bank had to resign, which means they're broke. We'll see how it works. The bank, and of course, we've been talking about Italy once in a while. Bank Carige, if you will, Carige is the bank. They were taken over, I guess, this morning from Reuters. The entire board has been let go in a unprecedented move, according to Bloomberg. They say it follows a failed attempt to raise 400 million euros after the billionaire family, apparently, who was the majority shareholder, said, nah, no thanks. We don't want to take any more. They control a third of the bank itself. There's now saying that the ECB is going to force some type of sale. And again, if they needed 400 million a year, you think about, hey, that's not that much. That was just for this month. Right? They're going to need it next month, the month after, the month after that. But don't worry, our banks are better capitalized today. Keep believing that. Listen, if they were so much better capitalized, if they had done such a great job, then why did they go to the SEC and change all the rules about your bank account? Why did they change the rules about your 401ks and your IRAs? Why did they change the rules about your annuities and your money market? Remember now, when it gets really bad, you're not going to be able to sell. We already know about banks. What are they going to do? We know from Greece, can't take your money out. Go to the ATM, you get $20. Right? You go to the ATM, you get $20. Well, I want to close my account. Sorry. I want to take my money out. Really would like to. I'd like to help you, Mr. Schmuckatelli, but government says you got to leave it in there. These are the new laws. But you think they did it for fun? You think they did it out of the kindness of their hearts? Well, they already know. Right? They already know. Think about it for just a minute. $22 trillion. They're telling you this year, oh, we're going to hit $1 trillion. No, it's almost $2 trillion. That's the problem. That's not the real number. And then after that, every single year, the debt rises. Do you know inside of 10 years, we'll spend $1 trillion just on interest? Well, then again, unless they go super negative. Or they just simply replace the money. Patriot Radio News Hour. We'll be back after the break.
This is the Phyllis Schlafly Report, a daily commentary continuing the conservative pro-family legacy of Phyllis Schlafly. Now, the president of Phyllis Schlafly Eagles, Ed Martin.
Iowa, in some ways a political cross-section of the entire country, was a perfect display of the cross-currents in the new Trump political realignment. Democrats won 7 new suburban seats in the House, but lost 2 blue-collar seats to Republicans. In the Iowa Senate, the GOP actually had a net gain of 2 seats from the Democrats, again by racking up surprise victories in blue-collar districts. Trump's persona and his America First policies resonate so well with the working class. Conservative Congressman Steve King triumphed once again over vicious late hits and ambushes, which illustrates the tremendous resilience of those who are the most principled like him. The Republican governor of Iowa, Kim Reynolds, also won re-election. The Rust Belt state of Ohio elected a Republican governor, re-elected all its Republican congressmen, and re-elected a supermajority of Republican control over its state legislature. This is a state that President Trump has successfully turned from purple to deep red after Obama had won it in 2008 and 2012. With only about 15 months left for Democrats to coalesce around a presidential contender to run against President Trump, they have no one who can compete with him in Middle America. Polls said that Democratic Senator Joe Donnelly would win re-election easily in Indiana, but instead he lost to a political newcomer, Mike Brown, by a wide margin of 6 points, which could have even been a 10-point loss in the absence of a Libertarian Party candidate. Runaway early voting procedures ensured Republican losses in Arizona, California, and Nevada, and there is nothing Trump could have done to avert that. But Trump brought victories where none were expected, such as all-important U.S. Senate seats representing Middle America. The campaign for the presidency starts after the midterm elections, and Democratic contenders are already jockeying for position. But Trump appears invincible in the South, most of the Midwest, much of the Rust Belt, and nearly all of flyover country, which doesn't leave enough Electoral College votes for the Democrats to regain the White House. Trump worked harder in campaigning for his supporters than any president in history, Republican or Democrat. House Republicans would have done better if more candidates had stood strongly with the president.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Do you like what you see at the Trump White House? Will President Trump continue to advance conservative ideals? At phyllisschlafly.com, you gain complete access to Phyllis Schlafly Eagles news updates and commentaries and can track our work on Capitol Hill. Go online often to phyllisschlafly.com. And thanks for listening to the Phyllis Schlafly Report.
800-951-0592. Gold's up another 7 here, $1,288 in change. Silver, throw another 10 cents on to silver now, $15.63. The Dow's down about 80 points. Not a ton of economic data. The biggest piece was another one of those soft numbers, the manufacturing index, the lowest level since September of 16. I'm not 06, 16. Still positive. The number above 50 is positive. It's all the way down to 53. So that's a number at the height that was in the low 60s. Then it went into the high 50s, then the mid 50s, and now we're in the low 50s. The economy kind of see where we're going, and this is one of those ones, again, I think that falling oil price having another big issue. Here's the other thing. Wages. They keep telling us we're making more money. And I keep telling you, no, we're not. Now, there are people that are. You know, the 7% that do. Inescapable. A constant stressor. I see no way out. What do professors, real estate agents, farmers, business executives, computer programmers, and store clerks all have in common? The harsh reality of living paycheck to paycheck. According to the Washington Post. Now, the Washington Post. So take it with a little grain of salt. The millennials, the Gen Xers, the baby boomers, big cities, rural towns. It doesn't matter. They tried to save, but they rent. Child care, student loans, medical bills. They all get in the way. Throw taxes in there. The paycheck to paycheck experience. According from the recent report from the Federal Reserve, right, the same guys, you hear Jay Powell say, oh, yeah, people are making more. We're worried. We're worried about inflation. They're not worried about inflation because they lie about inflation. What they are worried about is we're worried that people may start making more money. Talking about, now this is the Federal Reserve number. The Fed says 4 in 10 can't produce $400 in an emergency. We all know that number is like 7 in 10. And then they start talking about all of these people throughout the country that are living paycheck to paycheck. And I'm going to tell you right now, the slowdown's coming. It's already here. I know you don't want to hear about it. I don't want to hear about it. But it's happening. And for most of the people that are getting laid off, they're already barely hanging on. And you start really kind of piecing all of this together. What's the common denominator to all of this? Debt. The amount of debt that not only they have, the amount of debt that the cities and the counties and the states have, and the national debt, and living well beyond our means, and then you've got a central bank out there that is absolutely clueless. You know what? Here's the sad thing. That would be one thing. Right? I can almost live with that. We all know people out there. Right? They don't quite live in reality, right? They're clueless. Right? We know people like that. These guys aren't clueless. They have access to all the best data in the world. And you hear, oh, this is the greatest economy. Then why are so many people living paycheck to paycheck? Never been more. And then you start hearing about all of the things like this. Anti-money laundering. All of the companies out there. Did you see the article over the weekend about all the retailers? And the list continues to grow that won't take cash. How about this one? The Eurozone. the final printing of the 500 euro dollar banknote. Right? Because that's just too much. You didn't get rid of it. Only bad people use that. Starting January the 27th, 17 of the 19 euro nations will no longer issue the $500 note, and by April the 26th, it will cease to exist. The notes that are in circulation will remain legal tender for now and can be used to make payments by people that will actually accept them. You know what's coming. We won't take them. Right? And just force them back into the banks. And you know, because I've told you about all of these things, about all of the pressure the bank puts on, and all the stories I've told you, you know, like for us, we get paid. We get charged. Not we get paid. We get charged to put cash in the bank. Eventually, what they're going to do is what? Make it so complicated and so difficult that you just will want to stop taking them. And you sit there and you see these retailers, oh, it's safer, it's more convenient. Listen, they made it inconvenient. And the reason is simple. It's getting close. They want to make sure it's all in there. That way when they change it over, it's easier. If you get left with your money in those debt markets, you're going to pay for it. It's just that simple. I've already told you. Less than 10 years from today, the debt's going to be over $40 trillion. How's that possible? What, you think we're going to have prosperity with that? You think you're going to be fine with all your money in the debt market? Patriot Radio News Hour. We'll be back after the break. 800-951-0592 and allamericangold.com. And just kind of trying to figure out, and I'm watching all of this play out, and we hear from the central bank about how we don't see any signs of this, and we don't see signs of that, and we're raising rates, and the economy's so strong. And then you start thinking about 93% of the country makes less than $100,000 and has no money. The amount of people desperate to leave California, Illinois, New York, New Jersey, right? It just keeps growing. Matter of fact, everything keeps growing. If you bought a new car or truck recently, right, they had all the big sales, you know the costs are rising. But according to the central bank, remember I've told you this, in 20 years, they say there's been zero inflation on cars. Yeah, because they made them better. Why should that, it's laughable. Why should that matter? You would hope for the fact, hey, we can make the product better. It shouldn't cost more. New data shows monthly auto loan payments hit a new all-time record high, with a growing number of people borrowing at least $50,000 on a new vehicle. Listen, I know. I see it out there. My wife's car's got over 200,000 miles on it. So we've been kind of looking, and you know what? Sticker shock. Sticker shock. It's incredible. $50,000. I mean, 18 years ago, the median price for a new home was $130,000. This is $150 for this isn't even a high-end vehicle. In the third quarter, auto loans hit a new record of just under 31,000. Right, that's every loan. 31,000. The average monthly payment for a new vehicle now is over $500 a month. The average used vehicle loan also hit a new record high. Yeah, just under $400 a month. I mean, right, there's about $150 difference, $530 to $381. If you've been out of the market for the last 5 or 6 years, the numbers will be surprising. Yeah, well, I mean, most people, 5, 6, 7, 8 years. What is it? New loans now, new car loans, they're all 6, 7, 8 years long. And again, how do you think this is all going to play out? Now think about, you live in one of these blue states. I got a $500 car payment. I got an $800 student loan payment. I got this payment, that. It doesn't work. What we've witnessed from Wall Street is just the beginning. This isn't the end. This isn't the big buy the dip rally. Things have changed. All of this stuff that they tell you didn't happen, all caused by the central bank. They left interest rates at zero for a decade. What did they think was going on? This is what they wanted to happen. They wanted your home to be worth way more than it was. I feel sorry for all the people out there selling right now. You're learning a hard lesson, aren't you? Getting hard. And I don't want to make it sound like no one's buying a home. It's getting hard. That price keeps coming down. All that equity you thought you had. Then you start thinking about all the other, just health care. I wish my health care payment was only $530 a month. Right? I mean, you spend, the average family now, we're spending $10,000 a year on health care. Up until my second child was born, health care was almost free if you had a 40-hour-a-week job. I mean, they took out maybe $40 every other month, or every other week, I mean. I remember when our first son, Joey, was born, it didn't cost us anything. Right now, well over half of every child born in this country paid for by the taxpayer. That's a fact. That's a fact. Let me ask you, did food stamps make things better or worse? Okay, when food stamps first rolled out in America, 2 million people were on it. Now there's 40 million. And we call that a good number. Patriot Radio News Hour, final segment coming up. Final segment on this Hump Day Wednesday. It's a short week. All the holidays hopefully now behind us. So starting next week, we'll be back to 5 days a week. Final look here at the market's gold, 1287. Continuing its march higher. Silver, $15.58. The Dow's been sitting there down about 70, 80 points. Been sitting here for most of the show. It's been oscillating between down 50 and down 100. Right now it's down 90 right this second. But it's early. We'll see. Not a ton of economic data out. I did find out this. Friday we will get the government jobs report despite the shutdown. So one of the agencies isn't affected by the shutdown. The other agency, they told us, at least in the memo that I read, that they're still getting paid to go out and ask people the household part where they get the unemployment report. That apparently is going to happen. So we will get that number on Friday. And you know what? Right now, I don't even know what would be a good number. Would a bad number be good? Would a good number be bad? I don't know. So that is coming, though. I did not see today the private sector one. My guess is because of the holiday. Maybe we'll get that tomorrow, the ADP report. But we will definitely be getting the jobs number from the government Friday. That should be a big day. It doesn't matter. Right? They already know. It's a debt problem, ladies and gentlemen. We lived well beyond our means for 50 years. And, I believe in the law of averages. Right? Law of averages. We're going to go through a tough 50 years. And we just want it to be what? Organized, right? That's all I hope. You know what I hope is anybody that has the means is able to protect themselves. That's it. You'll do well if you have it. If you don't, it's going to be harder. And listen, don't fool yourself. It's going to be hard on everybody. Right? I mean, you talk about, think about when gold touched 1,900. Was it great then? No. I got a bad feeling it's going to be a lot higher than that because, the numbers are so much bigger. I mean, essentially, from here on out, we're going to be adding $2 trillion to $3 trillion a year to the debt, and that's assuming nothing goes bad. I didn't even get to Social Security. They talked about it again. Listen, I told you what the number is. It's not 2032. It doesn't go that long. Matter of fact, as we know, because I've told you in all practical purposes, Social Security is already broke. Right? We already pay out more than it takes in. The only part that isn't is the fake slush fund, right? The lockbox, right? They're still pretending we've got one of those. Stop pretending. Get yourself protected. Get yourself some wealth insurance, gold and silver. 800-951-0592. Take the time, put it away. Patriot Radio News Hour. We'll be back tomorrow.